Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 4:15 in New York. It's Thursday, 16th day of July 2015, and this is the Daily Report for Gold and Silver. We have Janet Yellen speaking, we have the dollar getting stronger, precious metals continue to crawl to lower pricing. Gold currently off about $3.50, 1143.90. That's with a low of 40.60 and a high of 48.20. So you're only looking at about a $8 range in which we're trading towards the bottom 1/3 half of that range. Whereas silver was trading off about 1/3%, we've got about a 0.5% decline currently as we look at silver futures. Very, very quiet on the Western front, so to speak, currently trading off about 7 cents on the day. But most importantly, it has broken and is trading below $15 per ounce, low 84.50, 1484.50, and the high 1514. More on silver in a little bit. So traders, as far as dollar strength is concerned as it relates to the precious metals markets, first looking at gold, you can see that there actually is a little bit of buying coming into the market, pushing the market up roughly $1.30. Of course, again, that proverbial salmon swimming upstream, certainly not enough to compensate the dollar strength, which is taking away almost $6 in value. Silver a little bit different, trading nominally lower on the day. Add to that the strength of the dollar, and that's what's giving our basic net 10 change, unlike gold, which actually is in positive trading but cannot overcome this dollar strength. So traders, with the equities markets back on fire, I believe the NASDAQ hit a record high. S&P Dow Jones Industrial closing very near their historical and record high. Dollar being strong, it comes as no real big surprise that the pressure put on gold lately has actually taken it to an 8-month low. Now we have oil coming down, we have the dollar getting stronger, and in terms of what we are looking for, I believe we could see further downside. And we've been talking about this over the last couple of weeks. It's not something that we're looking at as a new theory. However, the numbers that we've been talking about are really numbers that we want to watch very closely. Now, take a look at the lows that we hit today right in here at around 40, and look at how that matches up with this low here. If in fact we breach this particular low at around 1140, there's one more point that comes in at around 1131, and below that on a technical basis, and I highly stress this, but on a technical basis, we then begin to enter really nowhere land. In other words, we've got areas that we really haven't seen in quite some time, because once we drop below 1131, for us to look and match recent lows or recent highs, we've got to go back to $1,900 move upwards, because realize that once we breach 1131, that's the lowest it has been, the gold prices have been, I should say, since the market traded up and above 1900 and is now backing down. So we are really at a really benchmark area, critical area, and we need to see if this market will hold. So traders, to really illustrate what I'm talking about in terms of a critical level, I've just gone ahead, I've pulled up our daily chart. This one is in Japanese average format, but you can see that in essence what we've been doing is we've been lining up these recent lows to this low right here. However, if we go back to November of last year, you can see that this low right in here, and let me draw it as straight as I can, which I believe comes in roughly at 31, that's a number we want to see if in fact the market continues to drift lower, which personally I think it will, but if it touches upon this, whether or not we find support. Because as I said, once we go below there, we've really got to go back way in time to a pre-1900 pricing in gold. And with the strong dollar and the scenario that we have, my sense is that we could easily see that. Now, we've wanted to find some sort of a rally mode in which we can actually sell this market. I think any kind of a rally that we see at this point, in essence, is going to be a bull trap. And when we look at our current wave count, which is our wave 3, this is our wave 4, and in terms of our wave 5, where is wave 5 going to complete? because it shows in terms of a basic Elliott wave modeling, that's where we're deriving this 1083 number that I've spoken about over the last couple of days. I actually mentioned it for the first time publicly in an interview with Kitco News that will air tomorrow in the street. But that's why we're at such a critical area. When we look at the momentum, and that's just based upon Japanese average charts, we'll go ahead and blow this up. You can see that although we had some days at the end of last week, beginning of this week, that had these really small-bodied candles, which meant that even though the trend was down, there wasn't a lot of oomph, there wasn't a lot of strength to it. But now when you look at, even with these nominal moves, and you compare that to the midpoint of the prior day, in this case, because we are looking at daily candles, there's no stretch of the imagination, but you can see that size has grown, which means that that trend is, technically speaking, still fully intact. And it is for that reason that I think that at some point we'll find a little bounce in the market, something like an ABC, and then continue on lower. And that's what I mean by any kind of a rally is a point at which we should sell. The issue that I'm having is as we wait for any kind of a rally to position ourselves, we've seen this market drift lower, just a couple of days ago from that 60 area down to where it is right now, trading under pressure at about 1143. Which is exactly what we're seeing now because I've gone ahead and converted it back into a standard candlestick chart. The other thing that you can see on a daily chart here is that we have come off of the low, but we have a real opportunity that, as I said, at some point we'll see a conclusion of this fifth wave, because when we look at it through these charts, we've had our full count down to 5, and 5 out of 5. So the system is telling us that we could in fact have found some sort of a tentative bottom in here, and that is what would create the next set of waves, which would be that A, B, C wave. That's where we enter the short position. I don't think there's a ton of room to the upside, although I could be wrong, but it is hard to play this market from the long side at this point. So traders, what about silver and different areas of support and resistance that we want to look at? The one thing that I've noticed, they're running back in tandem, and we're also seeing some of the old signs where we get the greatest drawdown, percentage drawdown when the precious metals are down, silver compared to gold. We get the greatest percentage upticks when you have updates in the precious metals when you compare it to gold. When we look at silver, since it's really been at about 1780, we've had a clear decline down, a real strategic point. It just kind of nailed right through that. And of course, this again is on a technical basis, but it was this bottom. That bottom didn't hold any kind of weight. These sets of bottoms right here, they didn't hold any weight. We have this is that Thanksgiving day that we saw the market just clip down and then move back up, that wild gyration day. I think we had a $4 range in silver on this given week. That's right in here. We're looking at a weekly chart. So what we're seeing absolutely is a strong down week right now. It's already Thursday. We've barreled through different levels, and unless we actually close at this level tomorrow, which I don't see any reason why it would, but if we close, then we can look at this point as having some sort of technical credibility. With that in mind, though, a close below this point, we don't really have too many areas because the only other aberration is this low right in here, and that low is pretty much where we're closing at, below $15. So we close below $15 on the week, we're probably going to make a play for about $14.50. This has been Gary Wagner, wishing you as always good trading. Talk to you tomorrow for the weekly wrap-up and review. Bye-bye.